Welcome, traders. Adam Harris, Chief Market Analyst, and welcome. So, wow, we are now entering sort of the third week of January 2025. One of the things I want to draw your attention to, please, is that Monday will be a public holiday in the US, which just generally means that the trading volumes will be lower, but also because it is a change of administration, there could be some increased volatility in the markets. We don't really hit any high impact news until Thursday. So my idea here is to be very cautious between Monday and Thursday as there is a transition across and to see how they settle in. The other thing I find interesting, I want to just see how the Bank of Japan, if there's any discussion with regards to the rate decision, keeping in mind that they haven't changed rates in a while. Recently was the first time that they changed it for the first time in many years. And so, of course, what they're trying to do, of course, is to bring that dollar yen down. We're going to see how the markets respond to that. So yes, I do expect and anticipate some potential volatility in the markets this week, and especially on some of the charts. For the most part, I expect the U.S. economy to continue to tick over at this time. Let's see if we get any surprise news out, but these just wanted to draw your attention to that. So last week I was looking at a potential big or small to medium correction in the markets on the monthly and weekly timeframes. We saw a little bit of a spike in the volatility, but actually you can see here this week it's brought it right back down again. So overall, again, the markets continue to remain robust at this time. I wouldn't become too alarmed unless I started to see, in addition to other signs, lots of obviously red flags. We're not seeing any of that here. The last time we really had a recent spike here is going back to August 2024. We really haven't had anything of that. So right now the markets appear to be calm and happy. If we go ahead and have a look at the dollar index here, you can see the prices pull back into the moving averages. The trend structure continues to look relatively calm. What I would say though is you had a very strong move in the beginning and a pullback, very shallow pullback. We're now starting to get more and more pullbacks faster and faster. This is something I would have expected more often in the earlier stages. However, this can then be an indication of possible weakness. That being said, the dollar has pulled back in. I was looking for a pullback this week, however, it finished with a bullish candle here. So this really signifying that it is keen on taking another run at this level. Now, we still have a little bit of bearish divergence here, but I would say price action here is indicating this market expects to do a bit of a move to the upside. So keeping in mind, of course, that we could see a bit of a response or some volatility this week, I'm going to be prepared for the fact that this might continue to go higher. We might ultimately finish lower, but expecting some big swings, that it does look more bullish than bearish at this time. Comparing it, say, here to the euro dollar, so we had a very strong little bullish reaction this coming week. That bullish divergence continuing to build up. Market attempted to start to break back up above previous level of resistance. I beg your pardon, previous level of support, unable to do that, found resistance, and also here is looking as though it intends to explore further downside, but it is starting to show more and more green candles, a little bit more bullishness there. Looking at that weekly candle has become a slightly sort of bullish, indecisive version. We'll see how that goes. Again, that dollar remains strong. It has softened, but it has or slowed down. But now that we are transitioning through to a new administration, I want to see how the markets react. We don't really know if there's going to be any breaking news coming out over the coming days. So here, for example, cable as well, pull back into the moving averages and actually immediately started to produce those wicks and closed much lower here. It's already produced a swing high here. So cable continuing to look pretty weak. I was looking for a deeper correction. It failed to actually do that. Now, then moving on to dollar yen. So dollar yen did manage to break through a level of support. Finished the Friday with a stronger candle there. Now what's really happening is we are testing that level of support and resistance where we are, and looking to see if that dollar yen is going to be able to break back up above this, or if it's going to continue to find that resistance. And of course, this really ties in well with that Bank of Japan interest rate announcement and how the market is going to react to that. Dollar Swissy pulling back, this being one of the stronger charts against with the support of the dollar, but the structure of this looking actually a lot stronger than, for example, the euro looks weak. Euro is signing some small signs of strengthening, as is Aussie dollar, US dollar, Kiwi dollar, US dollar, but Dollar Swissy continues to look strong. This is a strong engulfing bullish bar closing right near the highs, so this certainly looks as though it wants to attempt to continue to push higher. Then we have dollar CAD. So dollar CAD, of course, finishing very strong as well. You could see continuing to produce and print hanging man candles here. But this is a sign of that very, very strong bullish reluctance to give up this trend. We also finished and closed above these highs. So again, supporting the idea of that stronger dollar. Let's move on and have a look at gold. So gold did something significant and undeniable this week, which is good in a way. It has broken up to the upside outside of this downward sloping trend line, but has immediately run back into resistance at this level at 2,700, let's call it $20 per ounce. And we could see having an immediate reaction there. But what I would like to see this week is we do have a relatively strong uptrend. The 50, 20, and 10 moving averages in a nice bullish formation. We can see here on the weekly we've had that pullback into the moving averages. Gold continues to push higher. It is still a little bit overextended here on that monthly time frame. You can see the moving averages coming up to meet it. So it's been treading water for a while. What I'd like to see this week is potentially it coming back into these previous highs and taking another run at that level, and we'll see if it ultimately breaks out to the upside there. So gold looking bullish, but finally having attempted at least to break outside of its current pattern. We'll see if it just stays in this range for now, but if we do manage to close higher here, then we have a very good chance that gold is attempting to resume its longer term trend to the upside, which is also just a very big surprise. And of course, the biggest one being, I've been talking about this for a long time, crude oil has been forming a bearish breakout pattern, and it this week actually broke out to the upside. So I think it's important to discuss that within the context of gold also breaking out to the upside here. Both commodities breaking out looking very, very bullish. Crude oil continued up, not just that it broke that downward sloping trend line, but also that it broke above this previous high as well as these previous highs here. So that is a significantly bullish development. To me, crude oil now looking, at least in the short term, looking more and more bullish than ever before. And so what I'm looking for this week will be a pullback into the moving averages and looking for potential buy opportunities to the upside there. Moving across to the US indices. So I spoke last week about looking for a correction. We had the bare minimum correction that the markets could muster. They really just came down and just tapped the top of the areas I spoke about, not even moving much further than that, and then recovering incredibly strong. So we've got a strong bullish engulfing candle here. It did break the lows here, so we could see that we did break those lows, but also that strong bullish engulfing candle here showing the price very much not wanting to give up at this time. We've also broken this downtrend on the daily. So my expectation for now, and that monthly candle also started to look more and more bullish off the moving averages. This is for the Dow. So for now, we'll see. My expectation is that the markets are going to attempt to continue up. They're not ready to take that breather just yet. If anything, they've come back with a vengeance, which supports that concept that we are now in kind of bubble territory, in that the markets will just continue to go well beyond where they would traditionally have taken a bit of a breather, but the markets are bullish. That is really where I'm going with this. Having a look at that S&P, also very strong bullish weekly candle. There's no doubt that the markets did have a bit of a correction and immediately just bounced right back. Okay, so no real signs of weakness at this time. What I'm looking for this coming week will be to see a follow through. The markets have to break through the high to continue up here. And but as I said, we've got the US changing hands over there, the administration changing hands. The markets in the last couple of weeks appear to have responded positively or bullishly towards that, and so we could very well see a continuation to the upside there. Those monthly charts, even though I still anticipate that some kind of a pullback at some point soon, this was indeed a bit of a correction. The markets just bounced back very quickly, and that is one of the dangers of shorting the markets, is the speed at which they can recover. So again here, looking at the mini Russell, I spoke about how the fact my concern was, would it come back into the range or not, and you can see it has very cleanly produced a bullish candle here within the moving averages. The moving averages have also rearranged themselves into the 50, 20, and 10. Nice bullish formation. So all of this actually supporting that idea that the markets are going to attempt to keep going at this time. The big surprise as well for me was the FTSE. So I've been talking recently about the FTSE continuing to print divergence, which it is at this time. But this was significant for me. This was a bull flag. We could see prices broken around or broken up to the upside. I really want to see if we could follow through on that, but that was a very nice, strong reaction to that. So bullish looking at UK markets. We've got German markets just continue to surge. So the DAX itself looking very good. A little bit of bearish divergence creeping in on the daily, but the weekly continuing to move higher. This looking very, very strong and healthy, and that's just a solid bar. So bullishness certainly in the DAX as well. No doubt it is there. All right, and very difficult to deny and pretend it isn't. It definitely is. Bitcoin as well, having this, or to me, always very interesting. It managed to hold at that support level, dipped below, it's pushed back up, and you can see again also a bullish engulfing bar over here. So even though it is still overextended currently at this time, certainly possibly in anticipation of this week, all of these markets have just broken out to the upside, looking very, very bullish, supporting again that idea of that stronger dollar. Let's compare this to, say, Ethereum. Ethereum, not much of a reaction, but also managing to stay above that 50-period moving average and could very well form a swing low this coming week. Let's move on to the Magnificent Seven. So here we go. We can see Apple putting back into the moving averages a level of resistance. That monthly coming back down towards the moving averages. So what I'll be looking for this coming week will be a potential bullish candle in this area if we get that, or do we continue down to push towards these lows? Apple not quite ready to turn around yet, but it wouldn't surprise me if this week, if the rest of the markets continue to push high, we could potentially print a bullish candle there. Microsoft breaking outside of its wedge, so let's just get rid of that, and we can see here it also producing a bullish candle as well, and that monthly candle starting to look really nice. So, you know, a lot of these charts, I stand by my assessment that they are overextended, but we did indeed get a bit of a correction. The bare minimum on a lot of these indices, the markets are still running on a little bit of extra juice, a little bit of that tequila in the punch bowl, but that could be something that goes on for a while. And actually, what I would rather do is just keep it more shorter term, week to week. For now, we can see here it's bullish, looks as though it very much wants to take another run to the upside. Let's compare that to Amazon. Amazon just pulled back in. This is a very nice, healthy retracement over here and a very steady bullish candle. So a break of the high here for me would be a continuation, and this represents, ladies and gentlemen, this represents over here pretty much a standard bull flag. Okay, so there could be some potential opportunities here on a break above the high there. Then we have Google consolidating and finishing off here close to the moving averages with that strong bullish candle above the previous highs. So again, we'll see how it reacts to these previous rejections as it continues up, but it looks as though it's going to take another run at that. Then we have Meta. So Meta, I spoke about showing lots of exhaustion on the monthly here, that weekly not looking as bad, but here again managed to stay where it is. That bearish divergence continues, but all that really means is that we're still within that area where we might ultimately get a consolidation or a deeper correction, but it isn't apparently going to happen this week, or it wasn't going to happen last week. We've recovered and bounced back from that. So there's still quite a bit of juice in the markets. Looking at NVIDIA here as well, this one having a better recovery from the previous week, but still battling with those levels of resistance. So NVIDIA basically treading water at this point in time to go more sideways. And Tesla having a very strong reaction here. So again, also a little bit of an overextension on that monthly time frame, but the weekly says it all. In fact, one of the clearest, and I had such an insanely busy week, I didn't get time to say anything about it when it happened, but this was a very nice strong bullish signal here. This is a double bottom with a bullish engulfing candle over there. This was a clear signal that it was going to turn around. This was a very nice bull flag, and price just broke out. So all of this combined with the weekly, combined with all of the bullishness across the rest of the markets, is saying that there is still juice in the market at this time. So am I throwing caution to the wind? Not at all. I am still cautious. I do believe we're still running on a little bit of extra juice, but the markets appear just not quite ready to quit. And the truth is they could continue from here on for quite a bit. So for now, I'm going to play it as it lies, to use that golfing term, and basically continue to treat the market as bullish, but with a little bit more extra caution and risk management in my trades. And I'm going to leave you with this. Thank you all. I want you to have a great week, and looking forward to speaking to you next week. Thank you.